To store money in a bank account, is it good or bad? What are the ups and downs? Well, let me tell you something out of my book of knowledge. Now, to answer this question, you can answer the next 3 following questions. Why do we use money? What is money? And what is the value of money? Now, chapter 1, why do we use money? Since money was invented, we definitely have it easier to make transactions. Before that blessing, there was the so-called barter. It was when one buyer actually wanted to buy a good or a service, then the counterpart, the seller, demanded a good or service of the same value for his product. Now, as the understanding of these double coincidences was so tiny, transactions actually were so difficult, and it was really hard to make these. Just a small example right here. You had one cow and you were willing to sell it, and the buyer actually offers you 3 lambs, then that was maybe a coincidence. If it was not, then you had to pay with more lambs or another kind of currency. Chapter 2. What is money? Money, first of all, is a currency, therefore a payment method. It is there for transactions regarding goods and services. And as it is accepted as a medium of exchange, it is also allowed to use it for these transactions by all participants, but also for debts and other financial transactions. Another function of money is that it acts as a benchmark or a measurement. It is used to determine the value of everything you can own, or roughly said, everything you can feel, see, and basically buy. Lastly, money can also be a store of value. At one point, you can save that money on a bank account, like you want. Then in a later stage, assuming there are interest rates, the rates that differ and also multiply your money, and the value of your money stays about the same, you are able to receive more than you originally planned to make. Now, interest rates are rates that multiplies your savings. Currently, they are at 0%, determined by the EZB, the European Central Bank. But money really isn't money. Only if a few characteristics are given, then it is really money. For example, there's the durability. It means when the money has to be used multiple times. The portability, when it has to be carryable or transferable. The uniformity, when it has to be the same value like other older versions. The divisibility, it must be able to be divided into smaller bits and pieces like coins. The acceptability must be accepted as a payment method by everyone on the market. And lastly, the limited supply, that money basically has to be there constantly. Since money was invented, and especially nowadays, new problems can be the differences between the changing currency, as there is a huge variety of them, like the Canadian dollar, Australian dollar, US dollar, and the Jamaican dollar. Just a few dollar examples there. And not everyone is having the same currency, of course. For some, it's even a problem to carry money with them. Could be in the case of inflations in maybe poorer countries, like countries in sub-Saharan Africa or Asia. That's also why the usage of credit cards only is discussed right now. Chapter 3. What is the value of money? The value of money can be measured through the Consumer Price Index, for example, the CPI. It uses a basket of goods to compare a consistent base of products each year that are daily bought and used. The increases in costs of products like milk, bread, or fuel are added and later averaged to the average costs. Each year they can differ, of course. It is also used for determination of the D and the inflation. The large rises in CPI and prices tend to be in inflation, whilst the large drops in prices and the CPI rate tend to be a deflation. There's actually another way of illustrating the changing value of money. An example, Florien has won 1 million euro and has the choice between accepting it now or in 1 year from a bank account with 5% interest rates. He is taking it today as he wants the money immediately. While he spends all his money in 1 year, the other opportunity has created 1.05 million euros. Therefore, upped the sum by 50,000 euros. Bada seems depressed and shocked now. It is the change in value over a period through an interest rate. Now, changes in money value is also something the European Central Bank in Frankfurt deals with. It has its main function to ensure the price stability for the currency of the euro. It tries to implement that through its monetary policy, throughout setting its interest rates, the rate that is determining the amount you get after you gave your money in the hands of the bank. But also throughout printing less or more money, that has positive and negative effects. If more money is printed, the money gets worth less. On the flip side, if less is printed, the money increases its value. The problem while storing your money on a bank account is that, just like in 2008, when a big bank crisis happened, banks can also get into financial trouble and therefore struggle to pay your money back. You could lose all your money or at least a store of it. Let's say that for 10 euros today you could buy 2 packs of butter, 2 watermelons and 6 eggs. Whilst with the prices getting higher in 2020, you would be able to buy only 1 pack of butter, 1 watermelon and 4 eggs. Finally, it can be said that, especially nowadays, it's not the best idea storing your money in a bank account. You should consider other choices like investing it in estates or cars, old timers, or just stuff like that.